Markets finally look like they're on the move after a period of eerie calm, not least due to escalating tensions in Iraq and a newly hawkish Bank of England. Nina and Sarah are here with me to discuss what's going to be feeding into that mix next week. Sarah, we're going to be hearing more on inflation in the Eurozone. Are all eyes on that like they used to be, or has it calmed down a little?
Well, it's funny, for a while there, everyone was looking at the inflation data, and it was sort of the make or break it data for the ECB. We'll have the final reading for May next week, and while ECB already put out their major stimulus package, people will still be watching it just to see if inflation is confirmed at 0.5% for May, which was the lowest in more than 4 years. So if it falls below that, I think we can still see people getting a bit concerned, more talks about deflation risk, but to say that it will add more pressure on the ECB, I mean, they already did almost everything they could do.
Yeah. Okay. And now on a technical point, the ECB is also going to start ending its sterilization measures of the S&P. Can you tell us what that actually means?
Well, it's sort of like a mini stimulus injection where it effectively means that more than 100 billion euros will be pumped into the Eurozone system. So that should mean that the euro would fall maybe a bit again, and we could just see more liquidity coming into the Eurozone next week.
So it's like a mini form of QE,
Yeah.
but informally. Okay,
Yeah.
and there's some action in Greece as well. They've been warned this week on austerity measure fatigue. What's going to be happening there?
Well, the Eurogroup of finance ministers meet next week, and the official agenda isn't out yet, but expectations are they'll be talking a bit about Greece after this IMF warning. They want that they identified a 12.6 billion euro funding gap for Greece next year. So they sort of have to figure out what to do with Greece, so they're going to see new austerity measures. Interesting stuff, definitely.
Now, Bank of England Governor Mark Carney has said overnight on Thursday that UK interest rates could rise sooner than the market's expecting. We should get some visibility on that next week when we see the Bank of England minutes and some of those discussions underlying that decision. Tell us more.
Well, the last minutes were actually very interesting. It caused a bit of a stir in the financial markets because it looked like there's a bit more of a lively debate about when the bank should look to raise rates, because policy members said that their views were becoming a bit more balanced about when rates should be hiked. And this is coming from a state when people were sort of unanimously voting for unchanged policy. So that will definitely be in focus, and we've had McCafferty and Wheel recently, comments from them recently suggesting that perhaps the bank has a bit more time, but definitely clues, we'll be looking for clues to see when the bank may well start to look to raise interest rates. And as you say, Carney did warn about the housing market and strength in that area of the economy. So what will be interesting next week is a financial policy committee meeting where there may well be some sort of discussion around tightening lending of certain mortgage criteria, for instance, but details on that won't be released until the following week in their report.
Okay, good.
So we'll be watching for that as well.
Okay, and there's something happening in the US as well?
Yeah, the FOMC meeting is next week, but we expect autopilot for tapering again.
Yeah.
So
Okay, good. And in the corporate world, H&M's reporting, that's first half results. This is a retail bellwether, a sort of consumer bellwether. What are we going to see?
Well, the second quarter has actually been very good for H&M. They've had a strong quarter of sales, particularly in May. And this is raising hopes that maybe this quarter will be better than the first quarter. But at the same time, there are some concerns that these sales have been strong because H&M has been maybe aggressively marking down its prices, aggressively promoting its stock. And there have been concerns around gross margins at H&M, and if that is the case, this way it may well feed into those worries.
Okay, good. Sarah, Nina, thank you very much.